I'm introducing the panel, so watch out. All right, what we're going to do here is I'll bring up the panelists and do quick introductions. We're going to start with a really quick overview that I'll run through on blockchain, and then we'll go to the panel discussion. But we've got John Poller from Opolis, who's joining us. Come on up, John. You can sit here. You can heckle me from behind while I'm giving the overview. Erik Voorhees, the founder and CEO of Shapeshift, and Sasha, who runs blockchain here in Colorado and is an angel investor who investing in a lot of blockchain companies. Cool. So quick show of hands. We had a little bit of a prelude to this with our morning keynote, but how many of you have heard of Bitcoin? Everybody here? Okay. How many of you own Bitcoin? So that's about 20%. How many of you before the talk this morning had heard of any other tokens or coins other than Bitcoin? And how many of you own anything other than Bitcoin? Okay, so this is a pretty educated audience. So I'm going to go through this pretty quick because I think we've got an audience that knows a lot here, and we can get to the panel. Which button? Is the forward button here? Okay, cool. Get to the panel real quick. But for about half of the folks in the audience, this will be, I think, really useful to level set so you understand a little bit about what is going on here. So let's start with what is Bitcoin. Bitcoin is typically referred to as a cryptocurrency. I often say that's unfortunate because really it's today at least a blockchain commodity. And the reason I say that is because the crypto part of what's going on actually is not that new or novel. The cryptographic math that's being used is used all over the internet in secure encryption and other places. The blockchain part of what's going on, which I'll talk a little bit more about, is new, and the combination of that with cryptography is especially unique. And I say commodity because, as we'll talk about in the panel here, today Bitcoin is a store of value that's highly volatile. It changes up and down a lot, so it's a lot more similar to gold than it is to at least mainstream currencies, at least a dollar, that tends to be a little bit more stable. But each Bitcoin is a cryptographic key. It's a unique address, if you will, a unique key that identifies a store of value. And those are stored on a distributed ledger called a blockchain that we'll talk a little bit more about here. So as we heard earlier today, Bitcoin is just one of now what are many cryptocurrencies, tokens, or coins. Those terms are often used as synonyms to each other. For those that get deeper into the space, you start to understand some of the nuances and differences that not all tokens are cryptocurrencies. Not all tokens are even intended to be cryptocurrencies or used in the sense that a currency is attempted to be used. There's over 1,000 of these today. As far as market cap, it's heavily skewed towards the top where there's a small number of these tokens or coins that make up the bulk of the market value that is out there today. Over the last year and a half or so, 2 years, there's been an explosion in value in these tokens and coins, Bitcoin being a large driver of this. And needless to say, this is one of the reasons that there's so much buzz about what's going on out there. The growth here has been greater than just about anything else in decades and decades of history, far surpassing at this point the growth rate of even the market caps of the .com space, which I was part of back in the day. So the big disruption here, though, as I mentioned earlier, is the blockchain. And at a very high level, what the blockchain does is change a world where trusted transactions between two parties almost always require a trusted intermediary. So if you're going to send money to somebody, there's a bank or some institution or multiple institutions in between you and that other party. If you're going to trade stock with somebody, there's institutions in between. If you're going to sell real estate to somebody, there are institutions in between that. There are trusted party or parties in the middle of those transactions. And without those trusted parties, you can't get those transactions done. The distributed ledger or blockchain, which are also synonyms, changes that to a world where the ledger, the record of transaction, is now stored on a large number of computers in a distributed manner that through a consensus algorithm are able to reach consensus about what the truth is of history. And once that's coded into the blockchain and recorded into that ledger, it becomes immutable. It becomes something that can't be changed. And so all of these different ledgers share a common history of the transactions without the need for a trusted intermediary. So this is nuts, right? Especially when you think about the cryptocurrency part of it. There's certainly still a big part of the population. So this is crazy. Why would anybody place value on numbers in a computer, or a big long key? If anybody's seen a public key for Bitcoin or Ethereum or any of the tokens, why would anybody place value on a series of letters and numbers? Well, it's not as crazy as you think if you go back and really understand and think about fiat currency, meaning dollars, yen, euros, things like that. First of all, less than 8% of the currency in the world actually exists. So we already live in a digital world. In fact, anybody who has any meaningful material wealth in this country, I challenge you to go and try and get all of your wealth delivered to you in bills. Good luck. You probably will not succeed. We live in a world already where everything is electronic, and fiat currency has no intrinsic value. We've been off the gold standard for a long time in this country. There's almost no country in the world that has anything similar to the gold standard. Fiat currency is a psychological and social contract between parties that they agree that it represents value, and they will use it in commerce for a representation of value. Now, there is one important exception to that I always want to mention that's very important, which is that in most countries they charge taxes. And in those countries that charge taxes, today at least, they want their taxes paid through fiat currency. If you don't, there's real material consequences. You go to jail. So that is a big difference between fiat currency and cryptocurrency. But even that may be changing. The state of Arizona, I don't believe it's passed the other house, but it passed the Senate. I don't think it passed the House yet, did it? They have a bill in the legislature that would allow the state to accept Bitcoin as payment for their state income taxes. If that happens, that's actually a really big deal because it starts to fundamentally change that difference between these two. So lots of skepticism, lots of intrigue. I reflect back to my days as a dot-com entrepreneur, and there are lots of similarities and lots of really important differences between what's going on with blockchain and what happened with the dot-com. Certainly when it comes to skepticism and intrigue, I would say some similarities. It's hard to remember now, but there were actually significant people. What just happened there? There were actually significant people back in the dot-com days that had doubts about the internet and the World Wide Web being as disruptive as it has become, had doubts that it even could grow and sustain. The CEO of 3Com at the time, Metcalf, was famously quoted about how it was going to implode in less than 2 years, and he was horribly, horribly wrong. And governments have gotten very involved in this as well, in good ways and potentially in bad ways. When you're dealing with something where you have a transmission of value, governments pay attention. Different governments are dealing with this differently. Some of them are becoming very supportive and trying to create ecosystems to attract the investment in the business. Countries like Singapore and Gibraltar in particular, Switzerland to a lesser degree, but certainly is further on the spectrum of being supportive of this. And you've got other countries on the other end of the spectrum like China and others that are trying to control it, outlaw it, really keep the government ability to keep their arms around it. And then you've got countries like the United States that are in between where they're still trying to figure it out. And unfortunately here in the US, I would say that we have gone from a regulatory environment where they were just watching it, not doing anything, to one where they now are pulling out the guns and going after a whole slew of enforcement actions. But what they're not doing yet is going through a thoughtful process to try to create any sort of guidelines or safe harbor so that this industry can flourish. And that's that's commentary for me that's a very unfortunate place for our country to be when it comes to blockchain and Bitcoin and cryptocurrency. But it's also an industry that's been rapidly increasing maturity. You can now buy futures contracts on Bitcoin. You have a large number of hedge funds across the world that are investing large amounts of money into this asset class, and venture capital has been investing a lot of money into this space as well. So the disruption here is huge. I won't go into all this, but almost any industry where you have a centralized intermediary for transmission of value or trust or information could be disrupted by distributed information and a distributed ledger. Including we had the great keynote speaker here this morning. You think about social media, I'm not saying this is easy, but the concept of having a social media platform that doesn't have Facebook as a trusted intermediary in that is theoretically possible with the distributed ledger and blockchain. Big businesses are taking interest in this. They're very much like the dot-com days. They're jumping into the fray here. They're investing in this. And obviously the startups have just been exploding. There have just been more and more great startup companies getting started out there doing all kinds of innovative and creative things with blockchain. We saw this slide earlier, ICOs, if you're an angel investor or a VC, these are really important to understand. ICOs, which stands for initial coin offerings, also an unfortunate name. Most of these are not intended to be cryptocurrencies. They're intended to be what are called utility tokens. Many of you may say, what's a utility token? Easiest example I give is, if you ever bought a ticket for a show, that ticket's a utility token. You paid money for a ticket. It now represents the utility of you can go to the show, and before the show, you can actually resell it, right? Now, often when you resell it, you have to have a trusted intermediary like StubHub in the middle of that transaction to get it done. But that is a very simple example of a token. In the world of blockchain, you can create much more diverse and complex business models where the tokens can be used to represent all kinds of different forms of value and utility in an ecosystem, and where they can be traded and sold between parties, and where that ticket could be torn up into a whole bunch of small pieces and sold, and where each of those small pieces would actually still have value, whereas the ticket would not. So most of the coin offerings that have been done are attempting to be utility tokens. In this country, the SEC is now saying most of the ones that they've seen have not been utility tokens, they've been securities, and this creates a series of problems that we'll probably talk about more on the panel here. So what are your options for investing if you're an angel investor in this space? One is you can buy the tokens, coins, Bitcoin yourself. You can get on Coinbase, you can get on any of the exchanges that handle fiat currency, and you can wire some money and you can buy those, and you can hold those, or you can trade them just like stocks. That's what a lot of the hedge funds are into trading, whether they're using algorithms or arbitrage. There's a variety of different strategies out there. And then the third path is invest in the underlying companies or enterprises, either as an angel investor or as a venture capitalist. So this is really the big question, and this is what we're going to turn to here in the panel is, at the end of the day, is this the next big disruption, or is this just a tulip craze? So with that, I'll turn it to the panel here, and first let each of them give a brief introduction for themselves and just give us just a minute or so of your high-level perspective on blockchain and cryptocurrency and what's going on with the space, and then I'll turn to a few quick questions, and we're going to leave lots of time for audience questions.
I guess I'll go first. My name is Sasha. I've been an entrepreneur in a lot of different companies and really dove deep into the blockchain space probably 5 years ago, just from a passion area. And since then, I've been lucky enough to really be at the ground floor of a lot of innovation. I help organize some enthusiast groups, Ethereum, Denver, Rocky Mountain Blockchain, and those get-togethers have become somewhat like mini conferences. I formed an investment fund, and we deploy capital towards startups that are building in blockchain, but also out of blockchain. That's me.
I'm John Paller. I'm the founder and steward of Opolis, which is a decentralized employment protocol. We have been family members of the RVC contingent for some time, actually in a, you could call it an Uber foreplay with a centralized intermediary that we've now decided to decentralize ourselves. Lots of reasons behind that, but the social movements that are being solved, or the social problems that are being solved with blockchain, I think hold the most promise. I'm a big fan of, just so happens I was at a conference 4 years ago with Dmitry Buterin, who's the father of Vitalik Buterin. Randomly, I didn't actually know who he was at the time, and then we've become friends, and I kind of went down the rabbit hole myself probably about 2 years ago. And most recently, we held the world's largest Ethereum hackathon at the old Sports Castle on Broadway. About 1,500 people from 31 states, 23 countries, and 58 sponsor projects from literally all across the world. So it's pretty fun.
Hello, everyone. My name is Erik Voorhees. I'm the founder and CEO of Shapeshift. I've been involved in the Bitcoin world since 2011, back when Bitcoin was $5 each. Back then, we, like all newcomers, we were worried that maybe we missed the boat. Turns out that wasn't true. I've been involved in a number of different crypto projects. most notoriously, I started Satoshi Dice, which was a Bitcoin gambling website back in 2012. It was roughly half of all the Bitcoin transactions in the world during that time period. And for the last 4.5 years, have been building Shapeshift, which is a digital asset exchange. So it allows people to take one kind of digital asset like Bitcoin and buy another kind like Ethereum or Litecoin, and to do so as frictionlessly as possible.
Great, thank you. So I'll kick it off here with a question, and you guys can just decide who wants to chime in first. But going back to Bitcoin, when Bitcoin was created, at least the vision of many of the folks around Bitcoin was that it would become an electronic distributed currency, a currency that could be used for transacting commerce between parties. But with its high volatility and with also not only high volatility in the price of it, but in the of sending Bitcoin from one party to another, which has been as high as $55 and now has settled down closer to $1. Give me your perspective. Do you believe it ever becomes a true currency? And if so, how?
So being a currency is not a binary situation. It is something that can emerge organically in a marketplace, and Bitcoin has been doing that over 8 or 9 years. So while most of you in this room probably don't use Bitcoin as your preferred currency for most of your transactions, any of you in this room can use it as a currency for some kinds of transactions. And so at the margin, it continues to grow in use cases and ways in which people can find value in its utility. Bitcoin is really amazing for certain types of transactions. For example, I can send $1 million to someone in China instantly for essentially $1 in fees, and no one in the world will even know that the transaction happened, and no one in the world can actually prevent that transaction from happening. So compare that to a bank transfer to China, which would take maybe a week, cost a lot more than $1, and any government on either side could stop it. And you start to understand the power of what this technology does. So while most people aren't buying bread with it yet, I think people will start to realize that a form of money that can move anywhere for free without control is a superior form of money than one that can only move within certain geographic boundaries with lots of fees and with lots of centralized control.
I'll agree with that. I'll also say that the volatility and the transaction costs, when they spike, they reduce the use cases that are of lower value. Erik pointed out this international wire transfer example. Craigslist recently added the option to indicate whether or not you're willing to use cryptocurrency. I think that's particularly useful if you want to do a private transaction for a vehicle. So if you're going to go on a Saturday or a Sunday to buy a car from someone, if you're selling the car, you probably don't want to receive a personal check from a stranger. And if you're purchasing the car, you probably don't want to carry around $10,000 of cash with you, nor can you run into the bank on a Sunday. I think that's a great, simple use case of Bitcoin or any crypto really, that makes it superior.
What do you think, John?
So I'm what you call Bitcoin long. I think there's a couple of factors specifically that create the volatility that need to be understood. First, there's really not that much money in it yet. I mean, when you look at the gold market of $7 trillion, big money hasn't even come in yet. So stabilizing markets through more liquidity is going to happen. How long it takes? It's taken 9 years to get to this point. These things have maturity cycles, and when you look at the metrics of adoption, how many people are joining things like Coinbase and actually buying the currency, and then you look at the volume of transactions and how it's being distributed, there's no way you could argue that it's not happening already. I just don't think that that's a reasonable argument. Now, is it fair to kind of like pick on the fact that it was 20,000 and now it's 8,000 or whatever? Sure. But those are, long term. That's what I'm saying. I'm Bitcoin long. I don't really care about that. I'm thinking about this in terms of the next 10 years, which I think we're going to see widespread adoption in not just Craigslist transactions, but maybe not Bitcoin in your average daily buying my coffee, but it could easily be Litecoin or something like it. that comes with inherently low fees and solve scaling issues and other problems that currently exist in the protocols. But that's another story.
Great, thanks, John. So next question, the vision of Bitcoin and most blockchain tokens and coins was a distributed world where no intermediaries are necessary. So why is it then that today the most successful blockchain-based enterprises, success measured by revenue, are actually all centralized exchanges? Why is that? It seems to be a little bit of a oxymoron.
Yeah, so Bitcoin technology, blockchain technology allows people to build for the first time ever decentralized models. That does not mean that every model should be decentralized. So many of the most successful crypto companies have actually been formal companies that are set up as a corporate entity that have a staff, that have an office. And many of these exchanges will hold a bunch of customer money all centralized in one server to allow high-speed trading and liquidity pools to develop. Doing that on a decentralized level can happen, but there are some trade-offs to that. So I think people should expect that in the crypto world, you'll find many different models ranging from super centralized to super decentralized. And fortunately, people can experiment with whatever they want.
Yeah, I don't buy into decentralized is inherently virtuous. I think that there's a space in the future for people to be able to walk into Wells Fargo and to have a crypto out there and be able to purchase cryptocurrency just like they can buy euros from a bank branch. My observation in the space has been that decentralized in some instances has become very disorganized, and it's been really difficult for to grow in their decentralized fashion. It's not to say it's good or bad. There's just room for different models, and one isn't necessarily better than the other.
Anything to add, John?
Yeah, so I think that the notion of decentralization is going to be refined. I think, like with a lot of things, you know, the minute you hear, like, well, for example, Ethereum as a protocol is completely decentralized, but the foundation is rather centralized and has, say, a couple dozen people working on the protocol as core developers. So they have enormous influence in how things go and what's done there. So there's a lot of debate whether or not it's actually really decentralized. And I think we're so early in it. I don't think it's going to be uncommon to see projects that are what I call sort of white hat centralized companies. Like that's sort of what we're doing at Opolis. What we're building, frankly, can't be built completely decentralized in the beginning of things. Over time, the goal is to need our core team less, so it becomes somewhat self-serve to use. As one component of it would be almost purely a public utility. So smart contracts that are written in the protocol, you could use, and you don't need any centralized authority to help you with it. It's just basically just is and it does. But then there's a path to that, and getting there is, you know, I think proven by many projects to be very difficult to organize in a completely decentralized way across the world, because a lot of these projects are like completely scattered everywhere. So I think we're going to see the models evolve, and we're going to see a lot of trial and error and what works, what doesn't work. And then I think there'll become sort of a new norm that comes out of it, that projects will be, in my opinion, probably rather centralized and then become decentralized, like on purpose, like intentionally over time, so that they're more usable and friendly to the average person.
I want to add that you specifically brought up exchanges. Exchanges right now are the on and off ramps from fiat to crypto. So as it grows, everybody needs to utilize an exchange. But as there are more and more use cases for crypto within blockchain applications, there will be less of a need to ramp off of crypto. And from an ecosystem revenue driver standpoint, I think exchanges will diminish in their value.
I agree with that. Yeah.
Great. So turbo round now. We'll start with Sasha and go down. So, and then we'll open it up for questions to the audience. It's 5 years from now. tell me which token or coin has the biggest market cap and just a couple sentences on why.
Ethereum will have the largest market cap. It has, by and large, the preponderance of developer mindshare. Most projects that you hear about that are being built on blockchain are being built on Ethereum.
Yeah, I think Ethereum has got to be the one that you bet on. Did you mention the size of the developer base? So they have a tendency to look at projects sort of adoption in terms of like what sort of developer base you have relative to the rest of the space. I think the last number I saw was they have 30x the developer base of all the other projects combined. So Ethereum is sort of the standard right now, and they have the most action. They've got 4 or 5 different scaling projects happening concurrently to solve the scaling issue, which is pressing in the space. Yeah, Ethereum, I think, and I don't think Bitcoin is going either, but you know, you asked about largest market cap. I think Ethereum is going to eventually do the flippening, as they call it.
So right now, Bitcoin is about 3 times larger than Ethereum in terms of market cap. I think it's 50-50 odds which one will be larger 5 or 10 years from now. It's true that many more developers currently are working on Ethereum projects. That's largely because Ethereum, unlike Bitcoin, supports smart contract development. Bitcoin will support smart contract development through a project called Rootstock. And when that happens, you will see a lot of those same people that are working on the Ethereum smart contract projects able to do it on both. And then other factors like liquidity and brand reputation and merchant acceptance might play a part. So I wouldn't be surprised to see either of them in the top place, and we'll see how we get there.
Great. Yeah, disclaimer, all the panelists here own, I'm sure, both of those cryptocurrencies. So give the classic disclaimer here that that was a buy signal, go out and buy. Yeah, my answer to that actually might be a little bit different. I would say there's a significant probability that the largest market cap will be a token that either doesn't exist today or that we very similar to the way that Google did not exist in 97, 98, 96.
I think, David, a good bellwether. Crypto has its best applications outside of Western countries because it fills a void where banking systems and or banking systems fail. So the question to answer which will be the most valuable and widely used cryptocurrency in the future, I think you'd have to look at which currency is being used in Uruguay and Tajikistan, and then you'll know, right? When both countries are using that currency.
That's actually, let's open it up for questions now. And that's actually a great aspect of this. That while we're finding the first question out there, just put up your hand if you have a question, and whoever has the mic is going to go around. Oh, they have to steal your mic, so you'll have to share that. All right. And as they're finding the first question, this is an interesting technology. It's, from my perspective, it's potentially one of the first big technology disruptions where the third world countries are going to have a big role in its advancement because it provides so much value to people in the third world who can't be banked, and yet they have mobile phones. So it's a very interesting social element of this technology. It's not the only interesting social element. It's a interesting social element. But with that, let's go to questions.
Hey guys, thank you so much for all of your insights on this. I have a question in the fact that there's the 3 main players that are sort of Coinbase, that everyone talks about being Bitcoin, Bitcoin Cash, Ethereum. No one's mentioned Litecoin. Is that sort of the ugly stepsister? And do you see that not being something that has any legs?
I mentioned it.
Oh, I'm sorry. Something that you wouldn't bet on? Because I've heard these things that companies may be using it in the future.
So Charlie Lee, who his Twitter handle is Satoshi Light. So if you know who Satoshi is, he's
Do you know who Satoshi is?
well, not literally, right? Yeah. So for all of you who don't know who Satoshi Nakamoto, there's a group of, or a person or a group of persons who published the Bitcoin white paper in 2009 under that name, and there's a lot of speculation who that is. So anyway, Charlie invented Litecoin specifically to address some of the issues with Bitcoin in kind of everyday use. So, I mean, Litecoin is certainly, because it's on Coinbase, it gets a lot of purchase action. Like anything that goes on Coinbase is going to get bought a lot of. Doesn't have practical application. He's incredibly bright. He's now working on it full time. He's left Coinbase. He used to work for Coinbase. Absolutely, it could. I mean, the properties are they often compare like Bitcoin to digital gold. Ethereum is digital oil, and then Litecoin would be digital silver. So the properties are much more probably in line with like everyday use because the transaction fees are super low. The transaction times are super fast comparatively. Bitcoin is working on all of these things as well. Ethereum is a totally different use case. So the goals of Ethereum are different, but sure, it could be.
Back to your question about the emerging unknown currencies. What's happening in China with blockchain and cryptocurrencies? And is it small people investing, or is it the government that's trying to drive it?
Well, the correct answer is none of us in the West really know what's happening in China because we don't speak Chinese, and most of what happens over there goes on, just through channels that we don't see. The Chinese government has done various shades of banning and then unbanning and rebanning and re-unbanning crypto exchanges, tokens, token sales over the last 5 years, to the extent that it's become a meme and a joke whenever a new headline comes out that China has banned Bitcoin. China is one of the largest markets for all crypto asset trading. Up until a year ago, it was the largest in the world. It has ceded that position to Japan now. But it is, in terms of market volume, equivalent in importance to the US. It doesn't have as many startups or crypto companies as the US does, but it's very important.
Thanks again for being here, guys. I really appreciate the conversation. So, David, when you first were talking, you mentioned utility coins, and then mostly we're still talking really about the crypto world about it. So I'm curious how you guys envision the future going, specifically with regards to exchanges. Do you see them eventually bringing on a lot of the utility coins? Do you see other types of exchanges coming out? I know, Erik, you may have a particular perspective on this given your company, but I'd be curious what everyone has to say.
So the great battle happening right now is that the SEC is uncertain which tokens out there are securities. And the reason that this is an issue is that it's gray and unclear. These tokens have different use cases in different ways, and some of them can be used as securities, but in other ways they're not. Frankly, a lot of the definitions that made sense in a analog fiat bank world simply don't make sense in a digital cryptocurrency world. And regulators, of course, are the last ones to realize that. So in the US, at least, a lot of exchanges are struggling with the question of whether they can even add a coin because they don't know whether it's a security or not. And if it is a security, then they have to be registered as a security and go through a whole bunch of nonsense that would basically turn them back into a bank. So I think that at least for the next year, coin additions in US markets will be few and far between. And outside the US, the ecosystem will advance much more rapidly.
Yeah, you made a statement that's not completely correct. Actually, I would say most of the exchanges in the world that handle cryptocurrencies, tokens, and coins handle a pretty broad range of them. It's a smaller number of the ones like Coinbase that only handle a few. So if you're on Kraken or Poloniex or the other ones, they handle a large number of these tokens or coins. But what Erik said is spot on. They're probably not going to be adding nearly as many, at least in the United States, going forward.
Well, and with the recent acquisition by Circle of Poloniex, if you read the public release statement on that, it is seemingly their intention to make Poloniex the first compliant exchange domestically for crypto. So, there's, like Erik suggested, there's a lot of hoops for that sort of turn them into a bank that somewhat defeat the purpose of what crypto is trying to do. So I think it's going to be an interesting development or set of developments that's going to happen. Wyoming just passed legislation that effectively deems or exempts crypto from the Wire Transfer Act or whatever that's called. And then they also created a whole new asset class for currency. So if more legislation from states come that way, we could be seeing much more favorable outcomes than just centralized banks taking it over.
Yeah, so if there are any state level regulators here or lawyers, pay very close attention to what Wyoming just did. This was like a week ago. Wyoming has been the single best jurisdiction on a state level for crypto friendly legislation that has ever occurred, and stands in stark contrast to what New York did a few years ago. So I was really impressed by what they did up in Wyoming, and I hope a place like Colorado has the common sense to actually move in that same direction.
I wanted to touch on the China question before we move too far on. I've done a lot of business in China and have been a Chinese observer, studied Mandarin in college. So Bitcoin kind of grew out of the ashes of the banking crisis in the US. And the white paper was published in 2008. I think Chinese consumers don't know where to put their savings. And there's this funky shadow debt going on where state-owned banks are being forced by municipalities to lend on projects, on state projects that are going vacant to boost GDP numbers. And the Chinese government's looking to have some sort of soft landing with that. But if they don't, there will be a banking crisis. And there, I think, will be a surge in activity in China, people looking to preserve their savings. Also, Chinese stock markets they look a lot like crypto markets. They're really volatile, and I think Chinese consumers are a lot less scared of crypto markets. What Erik was referring to was, I think, more blockchain development. We are sort of in the dark, I think, in the West as to what's going on in terms of blockchain development. There's one platform called Neo, which is being coined the Ethereum of China. But so I think there's a handful of projects being built on Neo, but I don't think that I don't think Neo truly will take mind share away from Ethereum.
To David's question about what's going to be the coin of the future in 5 years. So you have ERC20 and then ST20, and it's projected that the securities market is huge compared to the utilities market. Can you speak to whether or not something will arise in the securities market that will surpass what's going on with Bitcoin and with Ethereum now?
Yeah, let me comment on that. Interestingly, it's completely possible. It's been done, not on a huge number of occasions, but there have been entities done. It's possible today in the United States within the existing regulatory environment to issue a security-based token. That is completely possible to say it's a security from being. It's no different than using a token as a representation of a unit interest in an LLC or a share in a company. It's just a token, and there's a certain number of tokens, so you own a certain percent of the entity. The only challenge at all with that today is that there are no exchanges that have been approved by the SEC yet to trade those securitized tokens. But there are exchanges that are going through the process to get approved. I'm actually pretty bullish that will happen because I don't think the SEC sees any problem in that whatsoever. They'll be regulated just like any other security. That's going to happen. It will create a huge opportunity for securitizing companies on the blockchain and open up the door for things like Reg A Plus and that sort of capital raise to be more, because the cost associated with transacting the tokens between parties will be much less in the aftermarket. So I think there'll be a big opportunity there. Most of what's happening today is trying to be utility tokens, and from a venture perspective, and even from an angel perspective, you can go off and invest in the tokens, Bitcoin and the cryptocurrencies, but the real disruption that's happening here is blockchain and the business models that often can be built using a utility token construct to fundamentally change the way that an enterprise operates and even how it monetizes itself. And there are true valid utility tokens, but if our government's going to call them securities, of which many of them probably should be, but if there's not a safe harbor for true utility tokens, we are going to get left behind as a country. It's going to be a big mess.
So the question was, I think, is it possible that a security token could become larger than a Bitcoin or an Ethereum? I will say unequivocally not. A security token can't move anywhere in the world instantly. It is permissioned, meaning only certain people can hold it, only certain people can sell it or buy it, and it will only be able to be traded on regulated securities exchanges. Something like Bitcoin, the reason that it is successful and useful and valuable is because it is an open network that anyone, regardless of their age or their background or which made-up line they were born within, can access and use. So the protocol level stuff, the open blockchain protocols like Bitcoin and Ethereum, those will, in my opinion, always be larger than any of the largest security tokens themselves.
So I think the thing that the regulators are not thinking about is the borderless movement. So yeah, I mean, they're basically trying to solve a problem from historical thinking, in my opinion. And there's going to be some pretty monumental shifts in the way things operate globally. Countries like Singapore have intentionally not regulated cryptocurrencies. Why? Like Wyoming, they want everybody to come to Singapore to do their development. Well, if you squeeze enough, where's what's in the balloon going to go? It's going to go somewhere else. The United States is seeking to protect consumers, but these consumers, the ones who are really active in the blockchain space right now, don't want protected. So yeah, it's possible in theory, but I somewhat agree with Erik that this notion of borderless business, like world utilities, not just domestic public utilities, we think in terms of geographies too much. The future of this technology is going to be worldwide.
So I like that point about consumer protection. I think the consumers that are in the crypto world, they do want protection. They want consumer protection, but they are disenfranchised with alleged consumer protection handed down by a regulator, and they find consumer protection much more able to be delivered through software, especially through open source software. So they find a crypto-based digital financial system to be more open, honest, and legitimate than one that is controlled by banks. And you can understand probably a lot of why people have those feelings.
Where's the next question?
So I was hoping to throw a curveball, David, but you brought up a perfect. So outside of meta discussions around blockchain, I'm just curious, what are the coolest projects in your minds for applications? What's the coolest application that you're aware of that sits on top of blockchain?
Well, there's a bunch of them. Did anybody go to ETH Denver here? There's a few of you. So basically what ETH Denver was a 36-hour build-a-thon. The word hackathon gets a little bit of a bad rap, so we're kind of evolving to think in terms of build-a-thon. But there was 170 projects that came out of it. Some of the best applications I've seen, I'm a big fan of a project called Grid Plus, which is a decentralized utility for electricity sharing. It's effectively peer-to-peer electricity. They're starting somewhat interestingly. They're building utility in the state of Texas because it's somewhat easy from a regulatory standpoint to do that. It's very interesting. I think I'm in the talent acquisition employment space, so I think that having a decentralized identity, public utility connection, and ultimately self-sovereign employment is a huge potential application for blockchain because so many centralized intermediaries that create fluff and inefficiency in the space of work and just how things go. But then again, I'm shilling for my own project. Other projects that I've seen that I really like, I mean, gosh, there's so many to even begin listing. I mean, you've got decentralized music on chain. Ujo music is one that's really interesting. You've got, why don't I let these guys chime in here?
I think the most interesting projects are very mundane and they replace basic financial service. I think that's the near-term future for blockchain-based projects. I'd love to see a reliable escrow service built in blockchain. I'd love to see, John just said voting applications, like voting for your HOA or voting at a municipal level on blockchain. So not necessarily creating these revolutionary new products, maybe in the next 5 years, but rather recreating old products in a way that disintermediates the two users.
Yeah, and you said, the adjective used was coolest. I personally think one of the coolest today is Ethereum. People don't talk about it as a utility token, but I say it's the most accessible utility token by far that's ever been created. Ethereum is AWS for blockchain, and you pay for your service with Ethereum. Every time you transact on that distributed computing platform, you pay a gas cost in Ethereum. It is a utility token, and it's very, very successful. So it's very cool. But there's big ideas that are really cool. That doesn't necessarily mean they're good investments today, because they're going to take a long time. But the concept of blockchain being able to solve self-sovereign identity is really effing cool, and we all care about that, right? Let's eliminate the Equifax hacks. Let's enable us all to control our identity in a self-sovereign way using a distributed ledger where it becomes very, very hard to hack. And even if they do hack, they hack my identity, not all of yours, because I was stupid enough to click on the link. So those sorts of things, self-sovereign medical records, the vision of being able to finally have a medical record that you can own and control and that doctors can easily add to. There's a lot of really phenomenal things that can be done.
I always have a soft spot in my heart for the prediction market projects, Augur and Gnosis. Prediction markets are super cool. And what they do is they allow anyone in the world to essentially place bets on whether an event will happen or not. And from the wisdom of the crowds and those bets, you can actually learn things about the future before the future happens. And the reason it's so good as a decentralized project is because prediction markets are very controversial. Governments generally don't want people to be able to predict on anything that they want. So this is a really good, important use case for why decentralization is important. A project that needs to be done that hasn't yet, that will be one of the coolest, will be a decentralized lending application where all of the people who have capital sitting around, like all of you guys have money sitting in your bank accounts earning 0 interest, you're actually losing money because inflation is higher than the interest you earn. All that money is sitting there, and yet there's a whole bunch of other people in the world who are trying to borrow money, and they're paying 15 to 18% to credit card companies. There's a huge delta in that, where if the capital of people was distributed in a decentralized platform to the people who are borrowing, you could have quite a increase in efficiency. So those are the kind of things that I'm super excited about.
One of the coolest, I'm also really long for prediction markets. I wish someone actually would build one. But imagine using prediction markets to forecast the outcomes of elections instead of CNN polls. What impact would it have on our society?
Where's the next question?
Hi, I'm Russell Castaner with WAMPay. I'm really interested in the crypto commerce aspect, less than the so the next 2 years instead of future 5, and I think that what really stops crypto commerce, people doing commerce with crypto assets, is that they can't get it easily enough. So what sort of conditions need to be out there in the United States, because it's already happening in other places, to make it so that the first group of banks or credit unions is going to smarten up and say part of our ATMs It's part of our mobile app, and you're going to be able to buy it and just have it in a non-custodial wallet that you can just spend.
I think vendor adoption is key. And for vendor adoption to happen, we need to have good adoption of stable coins. So those now are tokens that are pegged to the dollar, and some are pegged via some kind of backing, whether it be dollars or gold, or collateralization of lots of other cryptocurrency. But once vendors know that there is no risk overnight of holding crypto, I think more vendors will be inclined to use it because they're tired of paying merchant fees to Visa, MasterCard, and then they will demand solutions from their banks. So stable coins, then vendor adoption, and then somewhere in the middle, protocol scaling has to happen so that transaction fees drop. But once the volatility and transaction fees are down, there'll be no reason for Walmart to not accept crypto for a transaction. And once Walmart demands some services, they'll come.
So the stablecoin conversation is an interesting one. It's somewhat antithetical in the long term to crypto, but it's going to happen in the near term for the exact problem that Sasha described. So there's a project called Maker that has a stablecoin called DAI, D-A-I. If you're interested, read the white paper. It's very interesting. Probably one of the most thoughtful and intelligent teams I think that's out there right now. It's got to be, there's got to be less friction for widespreadly adopted, and we actually accepted cryptocurrency for sponsor donations or contributions for ETH Denver mid-January when it went from here to like here. So we experienced firsthand some of the challenges that we had to liquidate. We couldn't pay our video production unit. Well, actually, we did actually pay them in crypto, so that worked out okay. But some of our suppliers, we couldn't pay them in crypto, so we had to liquidate to pay them in USD. And we actually had to experience the volatility risk problem there. So not terribly functional when you're talking about, well, we better go out and get 3 or 4 more sponsors to make up for the delta that we did. That's not a reasonable thing to expect people to do. One of the other things I think has got to happen is we got to decide as a country, at least in the near term, what the heck it is. Wyoming defined it as a new asset class. It's, but you've got the CFTC and the SEC all arguing about whether it's an asset or a currency or a coin. And there needs to be clarity around that. I think a new asset class makes a lot of sense because then it gives its own set of rules, whereas we're trying to apply old rules to it right now. It's just not working. So once that gets done, and I think there's more clarity around how it gets used and less friction, obviously, as a result of the clarity, I think that'll be a big step toward more retail and commerce adoption.
Next question.
I've got a question. This is a great discussion about the tower and the square, the central, decentralized world and philosophies. But could you all address something of the nuts and bolts of how cryptocurrency is and the problems that seem to me to centralize around incentives and costs for maintaining these decentralized nodes? My only understanding is that some of the miners have, for Bitcoin, have tremendous utility costs. One of my acquaintances heats his house with his servers. So those are real costs on the actual working of the way blockchain works. Could you give me some more insights into that end of the discussion?
Yeah, so the economics around mining are really fascinating, and I'll limit this comment to Bitcoin because each blockchain handles mining a little differently, and some use resource-intensive mining and others use what's called proof of stake, and I'm sure there will be other systems developed. The most important thing to know is that costs are privatized, which means that if someone is mining Bitcoin, they are responsible for the power and the utilities that they're spending to create. And when you understand that, you realize that it becomes a self-correcting problem, because if mining costs become too high for someone, they will simply turn off their miners and they will no longer mine. So I don't worry about that too much. Mining in terms of energy consumption tends to follow the price, or it does follow the price. If Bitcoin doubles tomorrow in price, then there is, in terms of dollars, 2x the amount of dollars paid out per day to all the miners around the world, which means that they will pay at the margin up to 2x more than they did the day before to do it. Similarly, if the price falls, miners will leave the network will readjust difficulty, and the problem is again self-correcting. So, you know, from the sense that mining uses a lot of electricity, sometimes that bothers people, but I think if you're going to be a proper economist, you have to understand what you're comparing that against. And if you're comparing it against a traditional financial system, you need to be measuring the electricity and resource usage of the financial system that Bitcoin is an alternative to. So whenever you see armored trucks driving around the street, carrying pieces of paper from one building to another, you should ask yourself why in the world that needs to happen. How is our advanced society, how is our cutting edge to be shipping pieces of paper in a heavy armored truck from one skyscraper to another, when the value is all digital anyway and it can be moved instantly over the internet? So compared to nothing, Bitcoin uses a lot of energy. Compared to the traditional financial system, I think it uses vastly less. And even if it used more, I think there's a good argument that it's still superior, because you get something that's more honest, more transparent, and something that the entire world can use.
And I think we've got time for one more. And I think what the part Erik said at the beginning is really important is not all these blockchains require this proof of work model. And just like innovation everywhere, I mean, my personal belief is the electricity cost part of this is not something that we'll be talking about in the future, because the innovation is already creating other models that aren't as energy intensive. So we have time for one more question. They gave me the
one more right here. Sean Murphy, everyone Wyoming resident. Do we have any other Wyoming people in here? So this question is for Erik. Erik, we talked a little bit about this at ETH Denver, but since we have so many smart investors in the room, and I noticed you haven't mentioned it about Prism yet today. I don't know if that's something you want to talk about today or not, but can you share a little bit about Prism, this notion of securitizing a Prism, and how that would apply to all of the investors here in the room?
Sure. So Prism is a product of Shapeshift, my company, and it's built entirely on Ethereum using smart contracts. And what it does is it allows anyone in the world to create a portfolio of digital assets, fund it with Ethereum as the capital to back it, and then the portfolio will rise and fall in value. And the reason it's cool is because it is perhaps the first commercial example in the wild of trustless or non-custodial derivative products. So any of you guys that are in the financial world, you know that derivatives are the largest market in the world. All of those derivatives require trust in one entity or a unit. Prism is an example of derivatives created without trusting anyone. Essentially, you're trusting code instead of people or businesses. And I think this is going to be a really important development for the financial world, where money and value can move around based on the rules that are inscribed in code, as opposed to the subjective whims of people. That should bring much more clarity, certainty, and transparency to financial markets generally. So hopefully Prism can help be an early prototype for that.
Do we have a date when Prism might be out of beta mode?
Well, in the US, it might be a while, because again, regulations kind of like choke off innovation like wherever they can. If you live outside of the US, you probably will use it openly in about a month and a half.
Maybe in Wyoming? I'm just kidding. Thank you.
Yeah, thanks.
Great. Thank you very much. Thank you all.